edition of Payroll Question Time. I'm Steve Yardley, MD at JJ Recruitment, and I'll be hosting today's session. Right, we're barreling towards a spring bank holiday, another bank holiday with the promise of some good weather. So barbecues at the ready outside. We also know, however, that in payroll, a bank holiday just means squeezing 5 days of deadlines, queries and last minute changes into 4 days. And then when you get back to the office, everyone asks you if you had a nice relaxing long weekend. So welcome to payroll. So if nothing else, hopefully our panel can help out on payroll questions that you have and make your lives that little bit easier today. For anyone joining us for the first time, PQT is all about bringing payroll experts together to talk through what's happening in the world of payroll right now and what it actually means in practice for payroll teams and businesses across the UK. Most importantly, it's about your questions. So please do keep those coming through on the chat. Drop them there, and then I can ask this wonderful panel of payroll experts live as we talk. Okay, a little bit of housekeeping as always. Today's session is being recorded and the slides and content will be shared at the end. So if you miss anything, have to make a cup of tea, don't worry, we'll share all that at the end. And super important, at the end, we'll share the Worx UK payroll legislation guide. That's at the end of today's session, definitely worth downloading given the amount of change happening across payroll at the moment. I think there's a lot of stuff that's been happening live just before this, so we'll discuss that as we go through. But yeah, the Worx UK payroll legislation guide, make sure you download a copy of that at the end today. As always, today's discussion is guidance and opinion. Please read the legal disclaimer. I won't read it out. But okay, so today's agenda, little note from JGA, like what we see in the market at the moment. We're finding what's relevant at the moment is how payroll is becoming more visible within organizations. So topics like SSP reform, payrolling compliance, holiday pay, they're not just payroll issues, they're being discussed in wider operational business discussions. And payroll teams are sitting close to the center of the workforce planning, tech, compliance, and the employee experience, often all at once. So well done. And that's reflected in today's agenda. We're going to cover SSP, payrolling, Employment Rights Act developments, the holiday season challenges as previously discussed, and also skills change in payroll if we have time. And of course, your questions and any hot topics that you would like to discuss. So as aforementioned, please drop anything into the chat and I will put it to the panel. Moving on to the panel, fantastic selection today. We obviously have Simon Parsons, Director of UK Compliance at Worx. Welcome, Simon. And Richard George, Payroll Compliance and Operations Consultant with extensive payroll expertise across complex payroll environments. And Samantha Mann, Payroll Team Manager at Armstrong Watson. Hi, Sam. And bringing back Matthew Akrigg. Welcome, Matthew, Policy and Advisory Leader at the CIPP. Welcome, Matthew. Thank you all for joining us. A brilliant mix of operational payroll experience, compliance, policy expertise. So please do make the most of their knowledge. Okay, so without further ado, I think as we discussed, there's a lot to get through today, a lot of things that are fluid, active, happening at the moment. So first up is SSP. A few organisations trying to get their head around this at the moment. I will throw this out to the panel. I don't know who wants to go first on this.
I'm happy to if you want me to. Yeah, so yeah, we're seeing a lot of stuff on social media, Steve, and in questions, predominantly about, because we've covered this number of sessions, but basics of what the change was is from April 6th, 2026, the PIW, period of incapacity for work, a 4-day requirement dropped to a single day, and the waiting days, that's 3 qualifying days waiting required previously, dropped to 0, so there aren't any. So you only have to be sick for 1 day with an entitlement to SSP, which is 80% of your average weekly earnings divided by the number of qualifying days in the week, multiplied by the number of days absence, or if that's on a maximum flat rate of 123.25 a week, or 80% of average earnings if less. And of course, before there was an element of your casual workers, 0 hours workers, etc., quite often needed to be absent for 4 weeks before they qualified for SSP, whereas now they only have to be absent on the qualifying day. And the requirements under regulations is that an employer must have for their employees at least one qualifying day a week, which if they don't agree one is Wednesday. So Wednesday is a qualifying day. So some casual workers may have picked up on the fact that if they say they're sick on Wednesday, even if they weren't due to work, they're entitled to 1 week's SSP, and they might work the Thursday, which isn't a qualifying day, so they get 2 weeks pay. So that's being seen, but equally I think there's been some stuff, and I'll let the other panelists come in, because I think it originates, Sam and Matthew, from something that was going round of the fact that some casual workers may not have had work in the average week period. So although they're now sick, their average weekly earnings might be zero. And so I'll leave others to comment and see where we are with that. So there were some queries going on of what people should do.
Yeah, I think that query also extended to the fact that with that casual hours situation, there's actually no option, I think it was on the SSP1, to actually relate that. So you're stuck between a rock and a hard place, I guess.
Yeah, so that's...
Oh, sorry, Matt.
No, you go first, Sam.
Yeah, thank you. I just wanted to put, because I know, Matt, what you're going to talk about, and the SSP1 has been mentioned, but and I know this was touched on by Simon when we talked about transitional periods. If the average weekly earnings are zero, then the eligibility is there, but the SSP average weekly earnings is nil. That in itself, I don't think has changed under the new rules. The PIW has changed, yes, the LEL, and it's the LEL that's changed. So if your average weekly earnings were below the LEL, you would have had technically, no, you wouldn't have had eligibility back then. So it would have been an excluding factor. But so I'm looking forward, Matthew, to hearing you expand on this, because it threw me into a bit of a panic when I read that. I thought, oh, what have I missed? So
well, I guess the key difference, Sam, is obviously, as Simon quite rightly said earlier, with a casual, it could be weeks and weeks before they're even eligible. But I guess now it's far more a scenario that's going to occur on the grounds that now you just have to be sick. So the period of incapacity, the waiting days, etc., changes the goalpost dramatically.
Yeah.
Sorry, Matthew, you'll go.
Sorry.
No, it's fine. So yeah, to try and expand on that, obviously we had the same sort of reaction as you, Sam, in that, if the earnings are zero over that qualifying period, and you calculate what they're due, which is 80% of their average weekly earnings, and 80% of zero is zero. Technically, are they eligible for SSP but being paid zero? And I think the clarification that we've got is that no, they should not be eligible, because the eligibility, or the sort of criteria of like the 28 weeks paid SSP, it's what's paid, and you obviously don't pay zero. So the intention is that should be put onto an SSP1 form. Unfortunately, there's no option to put it onto an SSP1 form at the moment. We've been speaking to the policy representative at the Department for Work and Pensions, and they are trying to rectify this situation and find an interim process at the moment. But unfortunately, that's all the update I've got for you at the moment. But the intention is that no, they are not necessarily eligible for SSP, and therefore should be provided with that SSP1 form.
Yeah, and does that go with the original? Because we had if they were sick since before the 21st of September and they'd used up their 28 weeks, that originally the interim guidance or instruction was that they would qualify for SSP, but it'd be 28 weeks of zero. But then they removed the concept of that, didn't they, and decided that zero doesn't mean zero. We get this anomaly with national insurance and tax, well, national insurance especially. So we've got up to the LEL, the contribution is nil. So there isn't any national insurance. And then from the LEL to the primary threshold, the contribution rate is 0. So actually they then say there is a contribution for contributory benefits, the amount is 0. So you then get, but that's a different department sort of thing. So you get this concept of nil and 0 having a value, whereas in reality, both are just nothing.
Yeah, and I suppose that's a weird sort of legal technicality almost in how HMRC provides those rates. 0% is a rate, nil is not a rate. But as far as the sort of SSP is concerned, as far as I'm aware, the legislation makes reference to SSP paid. So if the rate is 0, I don't believe that is as SSP paid, and that's where the sort of key differentiator is within those rates.
Yeah. And potentially if 0 was a rate and accepted as a rate, that rate would then link for every 56 days within sickness, so that they never received a penny for years.
Possibly, yeah. So like I said, I anticipate it's something they want to rectify quite quickly. We're keeping an eye on it. I will be chasing up our policy representative soon. But yeah, we'll keep you updated.
Yeah, I mean, I've got to say that this year, Matt, since we did get involved, and Matt knows that the CIP, CPD, and the CS Payroll group forms a little group which was adopted by the DWP in assisting with consultation, because the old statutory payments consultation group was disbanded at the beginning of last year, just as significant statutory payment changes came in. But I'm going to say the policy people have been very accommodating and cooperative along what's been quite a difficult journey. I think in reality it's quite a big change.
Nice.
Yeah.
We've got a couple of discussion points here on part-time workers and 0-hour weekly earnings as well. I don't know if we want to move through to those.
Yeah, sure. I mean, there are elements that we've sort of covered, but it's just as a reminder, because I think sometimes the queries that are coming up is sort of, what? Don't believe this. And I had certainly a retailer lady saying that they've got part-time workers who work different days who have sort of picked up the Wednesday rule on there must be a qualifying day. So quite often what they're doing actually is they're assigned days to work, so they're qualifying days. They phone in sick, then they're swapped to other shifts instead. So it's sort of, oh dear, you're off Wednesday, Thursday, can you come in Friday, Saturday as well? And then they're experiencing that they're paid SSP for Tuesday, Wednesday, and paid wages for Friday, Saturday, or whatever it is, the pattern. So they're earning twice as much, and they're finding that there's whole groups, because gossip on the street is common, finding that actually if you're given an allocation of sick, phone in sick for those, they'll be swapped out, you'll get double pay. I don't know if that's been a general experience of people, but it's been an experience in this particular retailer.
I think the whole concept, the whole discussion has been about qualifying days, and the importance is that employers and employees agree a qualifying day pattern. Now, if you have a set working day pattern, Monday to Friday, for all employees, then fine, it can go in the staff handbook, and that details this is going to be the qualifying week for us. We don't operate on a Saturday and Sunday, therefore the qualifying days are always going to be Monday to Friday. If, on the other hand, we operate 7 days a week and we agree with our employees, or our employers, our employees agree with us that there is a requirement for an employee to turn up at least 1 out of the 7 days, then we can agree that all days, every day, is a qualifying day pattern. it's only really that falling back on the regulatory requirement for the Wednesday only really comes into play where employers and employees haven't previously agreed. And it's the agreement before the employee goes off sick is the important part, not after they've gone off sick. So if they, I think the key takeaway for me from this discussion is that employers need to make sure that their qualifying day patterns have been agreed, are up to date, and are relevant to the new rules that exist. Because nothing changed with the qualifying day rules, but what changed, of course, is the fact that more people were going to be entitled to statutory sick pay than had ever been entitled before. So I think for me, that's the takeaway here, is ensuring that those qualifying days are clearly agreed with your employees. If you've only got 1 or 2 employees on a Monday to Friday, then fine, put it in their particulars of employment, that because those qualifying days are unique to them. And the fact that they turn up for work every day suggests, implies that they've agreed to those contractual terms or those particulars of employment. So for me, that's been the key takeaway, the key pinch point, if you will, about the new rules for statutory sick pay, that whole qualifying day pattern.
I guess it's also going to be very interesting when we start seeing, I guess, the view of the net cost of this. Obviously, it is still very, very new. And realistically, one payroll for most employers would have run. But it'd be very interesting to see, it's a bit like, when national minimum wage goes on, up the net effect on employers. Well, this is for some employers, especially in hospitality, retail, care, etc. This is going to be a substantial cost change, where the net effect previously was probably fairly minor. So it's going to be very interesting to see the sort of, I guess, fallout, shall we say, of that effect on employers when all costs continue to increase.
Especially with retail, because
Yes,
they've been hammered already, haven't they?
yes. I guess the oddity is if you go for a 7-day qualifying days and someone's only due to work on a Wednesday and they only report sickness for that Wednesday, they'll get 1/7 of a weekly SSP.
Yeah.
Well, I think there's an element here and risk that employees will twig that actually report any day you're sick, because you may qualify for SSP. You don't have to be scheduled to work at all, but you will qualify, and that's the risk. But if it's that Wednesday, they get a week. If it's 7 days and they report sickness on a Wednesday, it's 1/7. If it's 5 days, qualifying days a week, it's 1/5 for each day they report as sick. It's a very strange statutory payment. Well, in some ways it's common because all statutory payments are weekly, but it's based on a week and a division of a week, not on a day or hours worked. So it's always based on how many qualifying days you divide into the week, and how many days of those are they absent, multiply it back up. So yeah, people can't quite get their head around that, I think, at times, because they're thinking, well, it was only a day, but they've got a week. If you don't specify QDs, that's right.
Yeah, it's definitely one of those things where if you're only looking at it through the lens of full-time regular employment, it's
Fine.
very simple.
Yeah.
But if you have any degree of irregular hours, part year, part-time workers, you really need to look at, like Sam said, your contract, decide which way you want to go with it, whether you want to be specifying your qualifying days, the days you're scheduled to work, whether it's 1 day a week, 7 days a week. It's going to look different for different businesses because there's going to be no one size fits all. So it really is going to depend on how you want to structure that, whether your sort of the profile of how you want to run that is favorable for 7 days versus 1 day.
Yeah, I mean, I recall in the good old days, I'm that sort of age where I remember guidance for statutory sick pay, well, indeed, for all subjects relating to pay subjects, was very detailed. You know, you got a really good sizable document. I'm sure Simon and Richard can remember this. You know, in fact, I even dug one out of, I managed to find one on the archive with the thanks to Copilot. Thank you, Copilot. And the guidance used to be very clear that you don't pick your days. Your days are not based on the days you happen to be working that week. They're normal working days. So if Monday to Friday is your normal working day pattern, or Monday, Wednesday, Friday is your normal working day pattern, great. They are your qualifying days. They're normal days. That's in your terms and conditions, your particulars of employment. But where they are variable, then again, the older guidance, and particularly this was where government paid a proportion of the SSP, the days that SSP was payable for, and you know, they're the qualifying days and the only days it can be payable for, cannot just happen to be the days they're scheduled to work that week if they are not if it's not a normal pattern. Now, sadly, we don't get that in the current guidance. It doesn't have that. It lacks that clarity that guidance once had. But that's one piece of guidance that very clearly stuck in my mind. And so whilst the rules for qualifying days haven't changed, that's one thing that's constant from last year to this. The fact that more and more employees are going to be eligible from day one puts greater emphasis on ensuring that employers and employees agree what those qualifying days will be in advance of the sickness. So
I was to say, I think there's also a secondary here, and I've certainly seen it doing some consultation recently with a couple of software businesses, is the ability to, I guess, streamline and automate the process is very complicated. You know, if you have, you know, 5-day-a-week workers, you know, setting up qualifying days is very, very simple. But if you have a variety of obviously shifts, rotas, part-times, casual, 0 hours, etc., putting any form of automation in the qualifying days is almost impossible. So I guess it turns the process very manual should you have people whose qualifying days vary to the level that you can't preset those qualifying periods into your solution. So, you know, how do you automate that scenario? You just, you know, do you just set everybody to 5 days and suck it up? Do you set everybody to 7 days and suck it up? Because as I said, we're trying to make payroll easier. We're trying to use AI. We're trying to do X, Y, and Z to increase the human aspect. But we're almost then taking 25 steps back on the grounds that it means some poor soul has got to sit there every week, look at who's been sick, see what their qualifying days were that particular week because they're on variable rates and variable contracts, and therefore manage manually a process of paying SSP. So I think there are so many challenges outside of just getting people money.
It'd be interesting to see the scenarios that people have experienced, because I guess everything before April was just theoretical. And in early discussions, it didn't go ahead. They did look at qualifying days potentially, and there was this concept of open days, which didn't relate to individuals, but related to businesses, which would have predominantly resulted in 5 or 7 day QDs. But yeah, it's a variety of ranges. It's just interesting. I'm interested from our audience, if they're happy to share it through various, what they're actually experiencing. I imagine the majority are seeing no difference, but I think there's an element of growing for some areas where the employees are getting clued up on what to do, but it might be relating to types of industry and that's occurring with, and will that spread?
Yeah, I mean, it's interesting. It'd be great to hear from the audience. So if anyone's got any questions, please put them through, or experiences. I think what Richard said as well, because we're told that the world is becoming more like the employee world is becoming more fractional. There's more flexibility, and like people are doing 2 jobs, so it only feeds into it. And then it sounds like it could be quite manual if that is the case.
Yeah, because I mean, those qualifying days in some businesses could be fed by a time and attendance solution, you know, in real time. Well, if they're not in because they're sick, and therefore they're not possibly applying that scenario, there is, so there are countless issues which obviously have always been there, and this is the big thing, I guess. Nothing's changed. It's just the net effect due to the fact that that liability of payment is obviously now for everybody.
Yeah.
And as you said, I think it will be interesting further down the line to look at the cost, especially if it's areas such as hospitality, which are already suffering anyway, to see how that sits. But you probably won't see that for quite some time. But in real,
we're trying to keep an eye on any reports that we're hearing from employers where potentially changes in the system are leading to any areas of like abuse, almost, where people are taking on 0-hour contracts, fixed term work, and then phoning off sick and never even showing up for work, because of course it's also now a day one right. So you potentially have these situations where a brand new employee who you've never seen work before phones off sick. They've got no earnings, so then you have to use the potential earnings or a comparable employee, and they're essentially entitled to statutory sick pay off the back of that. So we're sort of trying to keep an eye on things like that as well, and listening out for reports.
Well, yes, and I can imagine that there will be abuse by new employees in that situation. But for clarity, one of the rules that didn't change with SSP this year is that an employee needs to work at least a minute of their contract. So they have at least to turn up on the first day and say hello.
Okay, my bad. Yeah.
This is me. Oh, I'm ill. I need to go home. Well, maybe sit at a desk, maybe look as if
you had about 45 more seconds there, Sam.
Yeah, if you could just do it. Yeah. It's that enactment of the contract of employment. Once it's live, you get run over by a bus on the way to your first job, then, you're out of the picture. But if you come into work, then go out at lunchtime, get run over by that bus, then the clock has started ticking. So arguably,
well, there's a positive note.
I don't know why I blame buses. Buses, I'm sure, are very, very safe.
Yeah, but you don't get anything for that day though, Sam, because it has to be a full day. But so the next day you could, if you're lying in the hospital. But
or if they get run over by the bus on the way home.
All right. It was just an analogy.
Very good.
Sorry, Matthew.
No, it's fine. Thank you for the correction, and I'll stay away from bus stations.
Very wise. Very wise.
Or go hybrid. Because I guess that's the other issue. If somebody's hybrid working and day one they're at home, and then they go sick, then it doesn't matter what the buses are doing. So
it was six months ago. Someone told me that it was the first time they'd fully employed someone through a full AI process. Never been met. So if you think about that as well, on that was 6 months ago. So imagine, and it would be in that kind of industry as well, which is kind of high turnover, flexible working hours. So, and also you hear the stories about AI interviews as well. So so you could be onboarded and never met a physical person. So
well, there was initial fear of that in the recent elections, wasn't there? That one of the candidates that stood for election and was elected wasn't real. I think it actually turned out that they were, but I think there was suspicion that everything was AI generated. But it did, I think, turn out that they were a real person in the end. But
yeah, the potential for I wouldn't call it fraud, but playing the game is there, isn't it? So haven't had any thoughts on or feedback on what's happening for people, so maybe it's a little bit early, but thank you guys. Complex, interesting, sounds like it's one that will keep going and challenging as we go forward, so and operationally for everyone. So moving forward to the next slide, looking at payrolling, another area generating a lot of discussion right now, and there's a lot happening here. So I don't know if someone wanted to lead on this with the recent announcements and changes. I know there's people vying to get what's come out.
Yeah, so at the moment, no changes to payrolling benefits. Everything's still full steam ahead for April 2027. We we, as in the CIPP, along with some other representative bodies through the cross-body working group, have been working with HMRC on some of the proposals and seeing if there's any areas that can be flexed and changed to be more accommodating. So those conversations are still ongoing, but as of yet, no update on that. We're continuing to work with them as much as possible. And we've been assured that we should be getting some updates to the guidance shortly. However, me and Simon were just speaking earlier, we don't know whether some of the different changes within government may have put a little bit of a hindrance on some of that, with the Exchequer Secretary to the Treasury, the XST, moving over to the Department of Health and Social Care. So watch this space, but at the moment, no real plans. We're just sort of really urging people to make a head start on what they need to do to plan for the changes as they come in April 2027. Assess what benefits you've got, see where you're getting that data from. We're hearing a lot about people with different benefits providers, third-party providers, usually around things like medical and car benefits, making sure that you know what data you're getting in. Are you getting the correct data? Are you getting timely data? Are you getting it into the right people in your organization? Do you need to look at those processes within your organization and plan for any changes there? Do you need to get someone within the payroll teams a little bit more upskilled in those benefits, or are you still going to have that segregation of tax professionals dealing with benefit valuations and then handing over the data to supply it through the RTI process? So I think a lot of operational things for people to consider. The other one being making sure that your employees are aware of what may happen when we switch over to payrolling benefits if you are currently using the P11D process. I know Simon's spoken about it on this podcast or on this webinar quite a lot before. There is always going to be, when you switch over from a P11D to a payrolling process, a period of overlapping taxation. And I'm a huge fan of saying overlapping taxation. Do not call it double taxation, because it is not double tax. It is overlapping tax. It is the arrears from last year coming together with the real-time tax for the current year. So really do recommend people avoid using the term double taxation, because it rings alarm bells in people's head where they think they're being taxed twice for the same benefit.
Yeah, and I think there's a few other aspects here as well, which and one of them obviously affects Simon more than us, is just the inability to plan software. They have given what they think they want, but the challenge now around whether that's actually feasible, correct, is going to be the model makes it very difficult. And I've certainly been with enough people who are challenging their software providers who are just pushing back, because how can you deliver something that hasn't been decided? But I think the other aspect is also, if you outsource currently, how far down the road are you in respect of possibly having to transition that process back into a business? There's a lot of companies who make a lot of money out of doing benefits, P11D advice, etc., and support, who are probably not going to be particularly proactive in moving the process away from themselves to you, possibly, or giving you options as to how they're still going to support you. So I think there's quite a lot outside of the internal process as well that has to be considered. You're trying to design something at the moment where you don't know the outcome, and I think that makes it a real challenge with the date now coming closer and closer. So interesting.
It's difficult. So as Richard's pointing out, lots are approaching the software industry and wanting to know what the result is. They don't know what the result is what Richard's saying, but that doesn't stop us starting the process, because the starting process is significantly important. So there's an element of let's head for the station or the bus station, as with Sam going back to buses, where we can look at the timetable of the buses when we get there. We do need to head off and start heading there, because there will be a bus at some point that's hitting the part-time workers for them to claim their sickness along the journey. No, but I think there's an element of don't wait. The other principle that I'm seeing lots of people coming in is they're trying to move their P11D reporting into payroll. That isn't what payrolling is. Payrolling is assessing the taxable benefit and taxing it. P11D doesn't. P11D reports the benefit. So there is a slight disconnect. So at the moment, there's an element of look at your payroll. What pay elements do you need for what benefits you operate, and where is the taxable amount coming from? Because payroll needs to handle that. The results that need to be reported on FPS are at the end of the process. They're a result aspect. Some of those may change, quite optimistic that they may change. Whether I get my dream or not is a different matter. And the reason why the software industry is pushing for change from the originals is because they've made it too difficult. So I think they've made it impossible. So even if I deliver software to provide the 145 extra data items, how are you going to know where to put the data into those 145? So the software has gone in with a simplification method, and equally, Matt will be familiar with some of the sayings I come out with. Why do I need to provide the neighbour's dog's DNA sample? It's no relevance to the taxation of the benefit. And that's an exaggeration, but it's not far from an exaggeration of some of the data that they were originally requiring to be reported. I think they've hopefully realised that. We'll see. Equally, I think it's fair to say they've realised or confirmed that 80% of all benefits are medical and vehicles. The rest of them are all periphery or not so common. And I know the accountancy industry have also been lobbying from the side for the international employment situation, is that international employment situation, payrolling is virtually impossible because they do things through self-assessment at the end of the year with a reconciliation. So what will happen? But I think, I'd like to say I believe they've heard and we'll hear announcements, but when, we don't know, and let's see where it goes. I would say they're imminent. In fact, we would probably have hoped that we knew more today, but we don't. But then something happened the other week, and the current or the Treasury Minister responsible is now the Health Secretary. So we'll have to see what goes where. So there are political things going on, and and the Chancellor spoke today, which also covers some aspects, and we must remember to come back to that later, because one of those does impact potentially payroll, workforce, etc., from the announcement from the Chancellor at just before lunchtime, I think it was today. I listened to the speech, so know what it is. There'll be announcements going around. I've blogged on it, so fairly straightforward.
Simon, just say it. Come on.
All right. The private vehicle use for business mileage has been increased from April 2026, so it's backdated to 55 pence per mile from the 45 pence which has been around since 2011. They've increased it by 10 pence and backdated it to April. Employers don't necessarily have to pay that, but you can claim tax relief if they don't for the gap. So hopefully that's seen as part of the cost of living summer sort of reset for everybody to get through the Iran war impacts on costs, especially for those who are care workers traveling from homes to home in their own car. They may find that the cost of fuel has gone up, but the mileage rate they're paid by their employer that could be tax-free hasn't. And so it's hopefully seen as a benefit. Hopefully we'll see some other announcements coming along. But I think there's an element of start your plan now, and your plan isn't what is my payroll going to do. I would suggest your plan is what benefits do I have? Where do I get the benefit value from? because payroll's not giving it to you, it's using what you give it. So, and the other challenge which we find with P11D services is P11D services are at the end of the year. They struggle to get the values at the end to meet the deadlines. Here, you need that data at the beginning from April. So it's no good running around trying to get it in June for the year before, because you need it in March for April. And you're going to have starters, leavers, deaths, changes, moves from one PAYE scheme to another because there's a cross-business transfer, all sorts of things. How are you going to plan those scenarios? Whereas the current P11D services, what happened? Oh, report it. Here it's what is going to happen. Oh, it's changed. I've now got to change it and report what I think is going to happen. Oh, it's changed. I'm now going to have to report what I think is going to happen and build up that way. And we do see difficulties even with the voluntary payroll, and there is now. The reason I think salary sacrifice is on there, Steve, is because there is so much confusion still about it. There are so many, we're seeing implementations of payrolling under the current scheme, for example, for EV salary sacrifice schemes, where the employer thinks they're not a company car. Let's be clear, for taxation purposes, it's a company car. And also there's another view of, well, it doesn't, because it's an EV vehicle, there's no tax liability. No, EV vehicles have a 5% tax, or 4% tax liability, rising to 5%. There is a tax liability, it's a company car. Oh, I can pay them the MAP rate. You can't, it's limited by the company car rates. There's all those sorts of things. But salary sacrifice, quite often, because they're negatives, reverse all the payroll setups. So the payroll setups aren't what you think they would be for a benefit. They're the opposite, because you're not wanting to reduce taxable gross. You are wanting to reduce class one. And the other aspect of payrolling for 2027, again, Matthew will hear me go on about it all the time, is we still don't know what the class 1A calculation is. All we know is that there will be one. And it differs because at the moment class 1A is a grouped calculation once on a single return for the employer. The proposals at the moment look, and I think it's being iterated potentially, although we're waiting for final announcement, that the class 1A calculation will be individual. So the amounts will be different than what's currently experienced. Because at the moment you add the whole bucket together, oh, it's £1 million of benefits, 15% of that, £150,000. In the new world, it'll be, oh, the whole benefit amount at the end of the year is £150,000, is £1 million. What's the class 1A? Well, it's all individual amounts rounded at various points. It could be anything from 149,000 to 151,000. There's no predictability in it the same way because it's calculated different. So, but I think there's an element of urging people, don't pester about what the payroll's doing yet. Find out what your benefits are and prepare where are you getting the data from and how you're calculating the benefit, because that value needs to be applied to payroll. So it'll apply the 12th or the 52nds or whatever divisions to tax it in real time and report it. And what do you do about late starters, early leavers, changes, maternity, sickness, etc. But crashes, vehicle changes, they all need to be thought, because we're going from retrospective looking back, reporting what happened, to futuristic predictions, which we need to adjust when change occurs.
Yeah, that could I just add, because I'm sure Matthew's can I take this opportunity? I was going to say it at the beginning, Steve, but we went straight into the very busy agenda. Can I just say welcome back to Matthew and congratulations on his promotion. I hope he enjoyed his time at HMRC, but I think he was much missed at the CIPP. So welcome back and congratulations. But before as I'm sure you've got lots to come in on, my bugbear, and Simon knows this, has been for a while, is about P45 checks. But why is that an even bigger for me now. And it's because of mandatory payrolling, because I fear that with mandatory payrolling coming in from next year, we are going to see greater reliance on the use of the 50% regulatory limit for relevant pay. And I think there's a lot of people don't understand what the 50% regulatory limit is. They still maybe think it relates to K codes, and if we haven't got a K code, we don't need to think about it. But it does mean that no more than 50% of relevant pay, or the relevant amount, the terminology used in the legislation, can be deducted in income tax. I think there's a lot of people in payroll possibly don't fully understand that, but more importantly, employees don't understand it. And employee communications, as we're putting together our plans at this point, is going to be such an important part of the successful rollout of mandatory payrolling for an employer. So thank you for letting me butt in there, Steve.
I'm going to go for it.
My bugbear, 50% regulatory limit. Let's talk about it some more. And P45 checks, please, in the future. So, sorry, Matthew.
No, that's it. It's a good point, because there are a lot of things within the current guidance that we've got on payrolling that maybe seem quite small and insignificant, but add up to sort of various levels of complexity when dealing with employees. And I suppose I didn't mention earlier, maybe I should have, I do have to caveat a lot of what I talk about around payrolling with the fact that I did do 6 months on secondment at HMRC, so I maybe know more than I can let on, but it was a very interesting experience, and something that will hopefully help us be better stakeholders as we go forward. So definitely a worthwhile experience. But yeah, around things like the 50% regulatory limit, it's going to be a challenge for employers to make sure that employees understand that, and then understand that where things like that kick in, the benefits that are being brought about by payrolling, which is essentially that you're not going to have those retrospective tax codes, are then going to kick in again, because if HMRC can't collect all the tax during the year, it's going to fall into that P800 process, which is where HMRC will pick that up. They'll either code it out or they'll contact the member individually. I think there are some occasions where it will go into a simple assessment process. So again, all these little things where you're going to have different scenarios happen. Pay teams are going to get queries on these things. You're going to be asked about it. You're going to be questioned on why certain things are happening. So on top of upskilling yourself in the processes of actually submitting this information via RTI, you also need to make sure your pay teams are upskilled in dealing with your internal stakeholders when those inevitable questions get asked. And that's without even diving into directors with 0 or no pay, but also have a bunch of company benefits.
Yeah, the number of people with unpaid tax on their payslip may increase, may it not?
Well, yeah, and I think that's quite key. We've spoken about it before. Is the principle is that the benefit process does not end on the 5th of April. It still ends in July. So there is always going to be a principal position where there are going to be a number of people who can't be clarified as accurate by that final payslip. And remember, once that final payslip's gone, there is no way of claiming back that taxation through the payroll between April and July. So as Matthew quite rightly stated, that P800 process could actually for some increase or change or become a model that they've never had before. And we talk about maternities, for instance, and as you said, directors, where there is no way of claiming that tax back through the payroll. So I think it sort of spans all that everybody has said. You know, Sam talked about communication with the staff. Well, there could be some very, I guess, reactive communication required once this process has got underway, when you actually then see the nuance of the administration you're going to need to do. So yeah, it's there's a lot more to it.
Thank you, guys. Mindful of where the time is at the moment as well. So if we move through to the next section, the Employment Rights Act, another topic that keeps rearing its head, and something we're watching carefully. But and some big themes on this. I don't know if someone wanted to. I haven't had any questions on it, but if someone wanted to go into the 0-hour contracts and anything around that that's recently sort of reared its head.
Well, importantly, there's still
Yes.
consultation running. Well, the last one finished today, didn't it? If memory serves. So we've had the flexible working, protection of industrial action, agency workers, and redundancy obligations. So there's been a number of consultations continuing, but obviously we're getting close now to the next tranche. One key one being the whole 0-hour contract area, which actually expands further than that into shifts as well, doesn't it? Because that's now sort of encompassed in the same environment. So I will let others talk. Matthew.
I was just going to say, at the moment, I don't think we've got any further information of when those things are likely to come in. With these sort of things, if you're maybe not as familiar with how the legislation normally works, we've got the Employment Rights Act, which gives the government certain powers to do certain things. Doesn't necessarily mean that those powers come into force as soon as the Employment Rights Bill becomes the Employment Rights Act. So there's a few things where we're looking at when these things are coming in, and we don't know yet. That'll be for the Secretary for State for whichever the area concerned wants to implement it. So with things like the 0-hours contracts, the curtailment of shifts, compensation for those curtailment, things like that, those are more likely to be some long-term objectives, just because of the amount of industry representation that those sort of things will probably attract. There's going to be some pushback on some of these from businesses, quite understandably, because some of these will come with significant extra costs or significant changes to the structure of how they do things within their HR or pay departments. But maybe just to touch on a couple of the things that will be coming in soon. So from October, we've got the some tipping changes where employers need to update their tipping policy every 3 years and make sure that they consult with workers, and also a change on the employment tribunal time limits, which hopefully shouldn't affect anyone, because I'm sure you're all doing everything perfectly and compliantly. But should you have any errors, such as unlawful deduction from wages, the amount of time that someone has to take that to a tribunal will be extending from 3 months to 6 months. So definitely something to be aware of. And then that's obviously from the last instance of that deduction, for example, happening to that worker.
On the other aspects I think of in relation to the so January 1st sees the dismissal claims being reduced from 2 years to 6 months, and so there's a lot of talk on the street about 6-month probation periods. Should they be 6 months? If you dismiss someone at the end of 6 months probation, and that starts for people starting their probation in July minus a week, because you need to give a week's notice. If you retain them to the end of the year, they're an employee on the 1st of January 2027, and dismiss them because they failed their probation, they have a basis to claim unfair dismissal. Whereas presently they wouldn't fall within the 2-year capture. So the assurance or suggestion is have a shorter probation period if you're really wanting to deal with that than 6 months. Also, we can be a bit tardy. In relation to the 0 hours, let's consider what some of the proposals are that are around. One is, if you get regular hours over a number of weeks, the employer may be obliged to offer you a contract for those hours. We know from ONS statistics that the average number of hours worked by a 0 hours worker is 21 hours per week. I'm not saying that's all 0 hours workers, but some 0 hours workers are full-time employee equivalents. Now, it could be that under the new legislation, when it comes in, if they're working 21 hours a week on average, you have to provide them the option to take a contract for 21 hours, which is assured. The other aspect on 0 hours workers is as Matthew's probably talked about, but we've got to consider payroll wise, because we need to then pay it, and it be subject to tax, holiday pay. What is it subject to? Is it qualifying earnings for pensions? Is short shift cancellation? So if a shift is cancelled, you may have to pay a proportion of that shift payment. Does that count for minimum wage? Suggest it doesn't, but because it could be less than minimum wage rate, etc. And can you then contact your employees the night before and say you need them in for 10 o'clock in the morning? They may consider that actually you need to pay a premium for that if you really want that, because you should have let them know earlier, because people have got to plan their lives. And so there's that sort of stuff that's potentially coming in. The indication originally was sometime during 2027, but I think, as you're indicating, Matt, some of the consultations haven't really carried out yet. So we don't know what they are or when. We just know they're part of the Employment Rights Act, that they will come in eventually, assuming the government survives, I guess, and it's not changed before then.
And I guess there's a couple of aspects as well, because they're looking at 12 weeks average, aren't they? Currently on that thing, but also importantly, it's an employee's choice, which could be quite interesting. You know, the forcibility of that contract versus the employee's option to deny it because it doesn't fit with their personal lifestyle.
Yeah, to be fair, I thought it was quite a elegant, maybe not the right word, but like a good solution for the fact that some people do genuinely enjoy the flexibility of the arrangements that those 0-hour contracts can provide. Now, obviously, you do have to sort of look at that through the view and weigh that it is then very obviously weighted in the flexibility side for the employee, not the employer. So the employers then have a little bit less enjoyment of that flexibility, which is obviously what the Labour Party intend with that solution. But it is definitely something that employers do have to sort of get to grips with, is that if you have 0 hours contracts because you genuinely need that flexibility, you may need to think about how to manage those relationships with employees going forward.
But the pressure's still on the employer that they have to go through the process and provide the option, etc., etc. Which
you have to say, here's a contract, and you are free to rip it up if you want.
Yeah, indeed. I mean, one thing that's interesting talking about employment tribunals is the latest government estimate is that claims to employment tribunals could increase as a result of the employment rights measures that are coming through, could increase by up to 17%, which is quite a staggering figure when you think that employment tribunals are already at their highest number since 2017 when records first began, and there's currently a backlog of 60,000 cases. So and having a backlog of employment tribunal cases brings about its own challenges in terms of, you know, people move on from jobs. So if you're claiming against, you know, sort of a previous manager or colleague, they might not be guaranteed to turn up at a tribunal. So that in itself is going to bring about more challenges. And then I know we're going to go on to talk about holiday pay, but of course with the Fair Work Agency, we could again see a huge increase in the number of tribunals being put forward, not by the individual employee, but by the Fair Work Agency on their behalf. And we've yet to see how that's going to work through. So, you know, yes, these are all positive measures from a worker's perspective, but they are going to bring about a whole set of new challenges that don't currently exist. So, sorry, not directly relevant to any of the bullet points, but sorry.
No. I mean, the tribunal stuff is sort of relevant to things coming in October for the Employment Rights Act. But like, are we up to about 8 months wait time on employment tribunals, or have I completely underestimated that?
Yeah,
I think it's a lot longer. It's going up for 18 months to 3 years, isn't it?
Yeah.
Which when we're talking about potentially lower earning, more vulnerable workers where they're on the wrong side of this one-sided flexibility, that's a hell of a long time to wait for redress on anything like this. And I'm not entirely sure what the solution is. You know, there was a consultation on introducing fees to the tribunal system again. I know they were abolished because they were seen as.
That's what I was going to talk about, because there was all of this stuff originally in the if we go back to the Conservative bill that sort of replaced, where the whole emphasis of the tribunal was going to be switched anyway. So the principal position was it was going to be down to the employer to have to prove and do the work and the paperwork, etc. Well, that kind of disappeared, kind of, did it not? So the other question is, you're still in a position where vulnerable, low-paid people are going to have to drive that tribunal.
Yeah. But there's interest out of the recent Working Lives report that's gone through, which is fed into the Fair Work Agency. Some aspects of tribunal, I guess, will convert over to Fair Work Agency. The problem with Fair Work Agency is they're not case by case. They'll be more broad. So if someone makes a complaint of something and Fair Work go in, they don't just look at the complaint, they look at everybody, and whoever they find, they'll then issue a notice enforcing the employer to do something about it and penalise them. So that may remove some of the aspects of where was employment tribunal, certainly from the holiday aspect when that moves over, because you'll have an enforcer that will go in. And equally, in tribunals tend to be singular. They can be grouped, but they tend to be singular, whereas enforcement isn't. It's broad. It'll look at everyone. So maybe that slim it down in some ways and it increase in others. It's just a thought.
Thank you, guys. There were some questions come through. I don't know if we covered it there. I'm pretty sure we did. There was a question on the increase in business mileage. Was that from the 6th of April? Was that backdated?
6th of April 2026. So it's backdated. So yes. To 55p for the first 10,000.
That was a brand new today. That has literally just been announced today. It's only the first 10,000 mile rate. But with it being backdated, I'm not sure if we did mention this earlier, but it's still an entirely discretionary rate that an employer can choose to pay if you want to pay it. It's essentially an easement on the reporting of paying those mileage rates. So if you want to backdate any previously paid mileage for the start of the tax year, you can up it by an additional 10p. If you don't pay it, the employee themselves can claim the tax relief through HMRC at the end of the year. So there are a few different options there, and definitely some things to have a think about from a business point of view as to how you want to approach that change.
And as we said before this even started, you're going to get a number of employers where that is going to affect, because they're not going to backdate because they don't have to. You know, if you have a very complex, highly mobile workforce, you're halfway through, well, 3/4 of the way through the second month of the year, there is a very large chance that they're going to say, going forward, we will apply the new rates. So I think, again, that communication part around the net effect is going to be very key.
I have some that will claim back the national insurance aspect, and the interesting aspect on this is the national insurance rate is 55p for all miles, not first 10,000. The 10,000 limitation, and then it's 25p, is purely for tax. So those that want through this process of claiming back national insurance, the rate goes up too for the employers' NICs.
Thank you, Simon. You must have read my mind. I was thinking.
Yeah.
Just
Here comes the rabbit hole.
Yeah, because there was a question on NI relief on car allowance, and would that be backdated? But yes, you're right.
Yes.
Yeah. We see the future. We didn't have any bus analogies on the last session, but let's see if we can.
I've learned my lesson. I will. There are other forms.
We can fit one in for holiday, I'm sure.
Yeah,
is a bus technically a car or a van, Simon? Are we going to go?
Neither.
When I use the example in full, I do actually put the responsibility on the individual crossing the road, not just the bus.
Yeah.
Okay,
It's not the
Move
bus
on,
stop.
holiday.
there, really.
Let's talk about holidays quickly.
And let's move into the holiday season with it. As I mentioned at the top, well, we're hoping
There
for
is
sunshine.
Well, there is a
Spring
bus
bank holiday.
item there, though, Steve, for holidays, and that's, of course, during the summer holiday, everyone between the age of 5 and 15 has free bus travel
There you go.
until
Okay.
September the 1st, I think.
So even higher risk. Oh my God.
It was also announced today by the Chancellor.
Oh
There we
wow,
go.
that's good news from a grandma who's got childcare duties. Trust me, that
Yeah.
is good news.
And VAT for children has dropped to 5%. Is that right, on meals, I think, and leisure
Yeah,
activities?
and obviously they froze the fuel
Yes.
levy as well, didn't they? So they
Yeah.
carried on with the same price of petrol in inverted commas.
But they're trying to force the supermarkets to fix pricing on basics as well. I think there's that.
They are.
And then
Yes.
apparently we're allowed to use Russian oil now as well. But anyway, we won't go into that by business. But
Only if it's dirty. No. Yes.
no, but yeah, holiday season. So spring back holiday Monday. Don't know if someone
Some of
wants
that
to-
all fits in there with for the announcements today. I guess if you're talking about a British holiday and the summer holidays from schools, the reason for bringing this in is the new powers that have come into play to a certain extent, and have we woken up to that? Quite often when I review holiday pay schemes of employers, they don't align very much with working time regulations at all. And there may be an element of they don't need to because they're better. So if they're better, great. But for some scenarios of worker that are also incorporated into those schemes, they work out worse than the working time regulations, which would be a breach. Potentially, you can only challenge that through an ET. But of course, with the Fair Work Agency, they will have powers to enforce and notify for payment, because I think the Working Lives report has identified that 7 million workers are having some form of employment right breached. Not necessarily holiday, that's other rights as well. So rights to pay slip, rights to a contract of employment, rights to essential information that you're meant to receive when you start employment, that's been around and enforced for some years, is not happening. But I think reaching into the holiday season, there's an element of thinking, all right, from April, you have to keep records of how you're meeting the minimum requirements of Regulation 1313A, that's 4 weeks and 1.6 weeks holiday pay, or the alternate for those who are regular or part-year workers, holiday hours accrual, or rolled up holiday pay, and keep those records for 6 years. That start point is April, so you won't necessarily have 6 years. You might have, but you don't need to have, but you do need 6 years in 6 years time. So that's record keeping requirement is now. And I'm not sure if UK employers have woken up to the fact, and they're probably thinking, oh, I've just got to keep a record of pay. Well, actually, the regulation requirements here is in relation to entitlement and pay. So are you giving your entitlement? And by look of lots of social media that I see, significant on the employment law social media questions relate to holiday pay. And the reality is that a lot of policies out there operated by many employers don't align and aren't compliant. There's an element of what is the Fair Work Agency looking for, because those are the records that you're keeping that they will look up to see if you're actually meeting your legal requirements. And if you don't have them, you can't show that you are meeting the working time regulations. So they may well start issuing notices to that extent. And we've had that to a certain extent with minimum wage with employers, where they'll claim they're salaried employers, but when they've gone in, they've said, can we see the time records of your salaried employers? We don't keep them. Oh, are they doing extra hours? Are they doing emails on the train? Are they going away for meetings? Oh, they're unmeasured workers. So they fall away from the salaried hours work They're now unmeasured. We want to work out how many hours they've worked and whether you made payments in the pay reference period or the one following. Oh, you haven't. Here's an enforcement notice. We're going to name you and shame you. And there's an element is that now extending into holiday pay? And my fear is it may well do. So what is happening there? So I don't know. I've done a round robin. It's time to let the others join in and see what their view is. But I actually think that most holiday pay schemes that employers operate haven't looked at the working time regulations. They're just something else.
Yeah, they certainly, I would agree. And I think that, well, they certainly haven't looked at the working time regulations since the working time regulations came in. And there's been a few tweaks and touch-ups since then, of course, with Regulation 13, as you quoted, and then the addition of 13A. Then, of course, you've got Regulation 15, you've just talked about the irregular part-year workers. And then that Regulation 16, the right to take leave. So it's records that demonstrate all of these principles. The payments, so that's Regulation 14, various elements of it, payments taken or made for annual leave. So if somebody's left their employment, then they might receive a payment for untaken holiday, and payments in lieu of termination, of course, Regulation 15. So all of those. Now the employer at the moment, the guidance is simply saying the employer needs to keep in a format or keep records that they reasonably see fit, will provide their defence. But I think this is going to be a moving beast in terms of once we see the Fair Work Agency start to sort of investigate employers, then I think that, you know, what's expected is going to change. I'd like to think it'll become a little bit more refined in terms of rather than just reasonably see fit. Obviously, no employer looks identical or fits identically. So it's never going to be that all employers will keep identical records, but I'd like to think there'll be a little bit more direction, particularly for smaller employers who don't necessarily have that expertise in-house. And so, you know, they're kind of juggling a whole host of other duties as well as payroll, as well as HR, as well as finance. So I'd like to think that the Fair Work Agency will be more refined, but if we pick up and build on our experience with HMRC's national minimum wage teams, then clearly over the years we've seen a huge change from they go in at light touched at the very beginning. And I remember when the national minimum wage regulations came in, they were very friendly, all about education, all about enabling. Of course, these days they're naming and shaming. So, you know, and hitting you over the head with a big banana if you get it wrong. And so, you know, I think we're going to see that. The question is whether or not the Fair Work Agency are going to come in all guns blazing, picking up from where the HMRC national minimum wage team are now, or have been, or whether or not, as I say, they're going to take a more softly approach. So, but employers should have been keeping some form of records, but in what manner, who knows? So.
Yeah, and I think it's very easily overlooked how many probably don't. You know, I worked for an investment bank a number of years ago. Everybody was an employee, everybody was full-time, no records of holiday were kept because there was no need to. You know, and I'm sure that's still fairly common because, you know, you just pay them their salary and dot off the days from how many they've had. So, you know, how many companies have underestimated what this means going forward? I think it's probably quite a big question.
I had a question come through. What happens if an employee chooses not to take all their holiday entitlement?
Use it or lose it for the first 20.
Yes, but I think there's an element of actually being able to show that that's really the case, because equally, I think we'll see on social media that there are some employers that seem to try and avoid holidays being taken. But if you've given the opportunity for them to take it and they fail to take it, lose it is quite legitimate.
And that's partly where the sort of record keeping comes in, making sure that you can prove that they had opportunity. The only situation where you would not lose the leave is if you were literally unable to take the leave through something like long-term sickness. I can't remember the case off the top of my head.
Max von Gettelstadt.
There you go. I knew someone on the call would know it.
Surprise, Richard.
But yes, if you are unable to take your leave through long-term sickness,
I've got that one.
You may knock it on for up to 18 months, I believe. But that is basically your only situation. Every other situation, you would lose it. So it really why they were unable to take it. But you want to be able to.
Yes, maternity, parental leave periods as well. That would all carry forward automatically.
It's the prudence of holding those records is key. And as you say, with the new Fair Work Agency having the powers to be, we don't know how hard they're going to come in, but they could. And therefore, you need to be belt and braces around your process, your involvement, how often you're reviewing holidays with your staff. You know, realistically, you should be continually explaining to them that they've got the holiday to take.
Yeah. And this has been a concern to Matthew Taylor, who heads up now the Fair Work Agency, from his original report, isn't it? So that must be 10 years ago coming up, or if not. So there's elements of the government have been aware with it. You could think, oh, that's the Labour policy, is it? Matthew Taylor was there during Conservative administration. It was a concern then. So lots of these, some of these changes are historic, not just on the current government, but a carry on. So the Fair Work Agency in some form was supposed to have been brought in, was it the year of COVID hitting us, and was delayed. So this is kind of a delayed implementation because of COVID delay. Do I get points for mentioning the horrible word?
And who it was Grant Schnaps who pulled the plug.
Can I just say that who keeps the record keeping leads us nicely, Steve, into the poll question for the audience.
It does,
because we haven't heard much from the audience yet, have we? So
no, it'd be good to hear. So looking at the questions on the poll, should holiday record keeping sit with payroll, HR, both, or neither? So it'd be good to hear what the audience say on that. While they're voting for that, there was another question came through. So it said we have a mix of permanent staff and casual 0-hour staff. Permanent staff initially get 28 days annual leave. Then after 5 years service get an initial 2 days, so 30. Rolled up holiday pay for casuals at 12.07%. Do we need to be mindful that if the casual employee has been with us 5 years or more, they should be the same at 30 days? Hopefully I've conveyed that correctly.
Yeah, and I think it's something you need to look at because there's protections for part-time workers, etc., and casuals. After a period of time, you have to treat them the same as full-time workers. So there may be the question of or thinking that 12.07% is actually too low, and you may be needing to apply a higher percentage, especially at the 5-year mark. But I think that's something for you to seriously look at and consider. And there's a question of whether there could be a discrimination case for part-time workers brought in comparison with full-time workers. Now, the answer may be no, but the answer equally could be yes. So there's an element of seriously look at that and the type of workers, because they're doing similar roles and similar responsibilities. They're going to be looked at equally.
Be comparable, but if you have a group with a protected characteristic overly represented in your casual staff, it could be indirect discrimination to do that. The sort of flip side of that is that a lot of these questions I always find is the red herring is sort of how many days or what should we be paying. The regulations specify a minimum at all times. They don't tell you what you have to pay or what you have to provide. As long as you're providing that minimum, you can decide, I want to pay people £1 million per day and you get 50 days holiday a year. As long as they're not being paid about £8 million per day, that's probably going to be a good enough payment for holiday. So it's always what that minimum is. If you want to go above and beyond that, that's great. But with special regards to the casual workers, just make sure that you're not sort of biasing against any protected characteristics.
But there is also the caveat to this that once you go over the minimum, it is an employer scheme and it is their choice. And as Simon quite rightly said, if there is a specific reason to give them more in a certain group, and you can argue that point.
Fine.
Difficult,
Yes.
isn't it? It's a difficult area.
Yes.
Next question. Is it enough or not enough to keep holiday records taken from entitlement?
Well, I'm going to suggest probably no. Entitlement certainly proves the 1313A in regards to that, but some of the regulations actually do go a bit further and refer some of the pay elements are covered by Employment Rights Act, aren't they? Sections, I'm doing this from memory, about 124, 123, around that sort of thing, which is the 52-week averaging. So there is an element of that aspect. So you may find they'll want to know that too, so that you're there. And some of us that have been salaried have probably found that there are periods where, certainly when we've had major projects, weekends generally don't get overtime, but if I do get overtime, I find that I get an average top up based on that overtime period, because the regulations do capture that and the court rulings do capture that. So salary alone, if they're actually doing extra overtime at weekends or special days or etc., and that's considered to be part of their regular contract entitlement, that they get paid for overtime, you'll find that, is it under the East Anglia ambulance ruling, that the courts would consider that should form part of their holiday pay. So it's just an element. The problem with lots of these things is there isn't a clear answer. It's a muddled answer. So you then have to start to look at detail and what it actually means. But yeah, hopefully that helps a little. So yes.
Thank you. And then the votes are in. So
yeah. Oh, I like the answers there. I've got a lot of sympathy for that, Steve.
You're happy with that, are you, son?
Well, not really. I mean, I guess there's an element who's got payroll at 8%. Sorry, I'm jumping in, and HR at 65%. I think the reality is a lot of the requirements, the regulations are relating to entitlement, and payroll won't necessarily know entitlement. It'll just receive an instruction to pay, and it won't know what proration, etc. Maybe it will. But I think there's probably a bit of both. So I have sympathy for the third answer there. But it's interesting. I'm surprised it said HR, because whenever we kind of go out and question employers of who they think the responsibility lays for holiday pay entitlements and pay, they all point at payroll. But I have sympathy for that if we're all payroll professionals on here, because the payrolls won't know what the entitlement basis is. They only know they've been asked to pay it.
Or perhaps it's because you've got 100 payroll people, they're passing it back to HR.
Probably.
Yes.
It's somebody else's problem.
No. Or I was going to say, I mean, it's interesting because my background is largely small employer, and so I'm used to being in a situation where, you know, I and many others of my cohort were responsible for all of those. So, you know, we would have been responsible for the payroll, but we would have also been responsible for the HR elements. So, you know, it's sort of been becoming then a jack of all trades rather than, you know, a master of any one of them. So, I think that's where the both comes in. So hopefully I'm not alone in my experiences there.
Okay, thanks, guys. We've got through a lot today, and we're running out of time. But that's the poll there. So the next slide was around skills change. So I don't think we've got enough time to really dive into it. But it was stuff I've done on roundtables recently, and I found fascinating. And I think it's just the changing nature of roles. But really, I just wanted to ask what everyone thought on this in relation to, you know, we all talk about AI. We were talking about it earlier on automation, but what we feel is happening and what we feel is happening in the industry. Because
there's an interesting question as well, Steve, or a thought, question thread that someone's put in there, which is I find it interesting actually.
Sorry, was this the question?
It goes, it says it's less payroll knowledge, more question for payroll experts. Appreciate you might need to prioritise, etc. It goes on, saying after the 15 years in payroll, a lot of my knowledge was learned operationally from other people and from industry practice. Over time, I've realised that some of these processes aren't always fully correct, and you can trace them back, and you can't trace them back to the legislation, I think. And I was wondering if that's all part of this skill change type aspect. Is just a thought, Steve. Sorry for interrupting. I'll let you carry
Absolutely
on.
fine. I didn't see that thread, I must admit. So
Yes.
I mean, it's a broader piece, because obviously everyone's roles are changing, but not everyone's and not every organization is changing at the same rate. So it's interesting to see how that's affecting people and what they see that change is, and what I suppose really the question is, what are the key skills that we see going forward within payroll?
I think for me, not picking up necessarily on the key skills going forward, because I think that's evolving at the moment, particularly with the whole AI discussion piece going forward. But I just kind of what I wanted to pick up on actually was the fact that every day is a school day in payroll. Everybody on the panel, I'm sure, will agree with that, and everybody in the audience would, I'm sure, agree with that as well. There's never a day goes by where you're not learning something new, and even after 47 years, I'm still learning new things. There's I have done today, so there's nothing that you expect at all. But the one thing I would just like to say, and again, I would have possibly have said this at the beginning, Simon, well done for this morning. Great presentation in celebration of Learning at Work Week. Now, again, every day is a school day. I didn't even know there was a week for Learning at Work to celebrate Learning at Work. So I just wanted to sort of call that out. I mean, it continues until the 24th. So if people haven't got involved, celebrating that whole learning CPD, it might look like in their organization, now's the time. There's still an opportunity to get involved with that celebration. Of course, the next big celebration for us is National Payroll Week in September. Matthew, I think it's September, so we'll be looking forward to celebrating that. But I've got a new date in my diary now, Learning at Work. I think that needs to be applauded, especially with the increasing number of apprentices coming into their profession, which is also encouraging. So that's all I've got on this.
Well, I'm going to sort of go back to where we're seeing the change, and a lot of it's first-hand over the last 6-7 months, looking at the employment and recruitment side of our industry. There is now so much focus of change on cost. So I think the two most seen things are analytics, which have never been a critical part of the role, and the second one is cost saving and workflow. I think part of the whole principle of AI coming in is to give people more time, but more and more I see now is around those genre rather than even the payroll skills. Companies are trying to cut costs. Companies are trying to be efficient. Companies are trying to make profit in areas where profit wasn't possibly there before. So I think the key aspect of change that I'm seeing, if we take AI aside, seems to be far more driven around those areas.
Interesting. Yeah, I mean, it's different every area, I think, and there are, there's certain places where tech is not being adopted at all, and also the examples that you made earlier, Richard, where it won't help, and there is traditional payroll skills still required. Some of the roundtables have done a bit on HR as well, and that the use of AI by employees makes their role more complex as well. So it can work in different ways, but I am mindful on time, so I think it's a big topic. We'll maybe pick it up another in June, which leads me to the point. Firstly, thank you so much for everyone. It's been very, very interesting, very detailed, and on point and topical. So of the time. So appreciate that. If obviously there's the SD Worx legislation guide to download, as I've mentioned before, and just letting everyone know, I believe it's June the 18th is June's next payroll question time. There we go. I got it right before the slide came through. So fantastic. But look, thank you ever so much, everyone. Thanks for all the questions. I will leave everyone to it. Everyone's very, very busy, and I'll see you all again in June.
Thank you.
Thanks,
Thank you
guys.
very much.
For us, you know.
Thank you. Cheers. Bye.
Bye-bye.